If you're a creative professional and you're questioning what legal structure is right for you and your business, then this is the right video for you. In this video, we're going to cover legal structures, liability protection, and then we're going to touch on taxes as well. If you're new to the Camber Dad CPA channel, my name's Evan, and I help creative professionals navigate the world of accounting and finance. Since this video is specific for creative professionals, this is not going to be an exhaustive list of all legal structures. I'm going to provide you with the information that I think you need to make the right decision on whether or not a legal structure is right for you, and then what type. Now I'm gonna go ahead and spoil the end of this video because probably 95% of the time, if you've gone through the steps to determine whether or not a legal structure is right for you and your business, an LLC is more than likely going to be the right answer. But don't leave now because I highly recommend sticking around for the entire video. We're going to talk through some of the other various structures as well. And then on top of that, we're also going to take a look at when it makes sense to form a legal structure. So if you're watching this video, you more than likely have not created a separate legal entity for your business. So I figured that'd be a good place to start. If you're an individual running your business, then you're automatically classified as a sole proprietor. The benefits of being a sole proprietor are, for one, it's super easy to set up. In fact, you do nothing at all. You are automatically classified as a sole proprietor the moment you start conducting business. Another benefit of that as well is that tax preparation is relatively simple compared to some other structures. A sole proprietorship is completely disregarded when you're preparing taxes. In fact, it's called a pass-through entity. So all the income that you've earned as a business automatically flows through to your individual tax return. But we're going to cover some more of that later. Another benefit is that it's low cost, so you're not going to pay any of the registration fees or anything like that you will for another type of business. Now, in terms of disadvantages, there's no liability protection with a sole proprietorship. Now, if you do a Google search, you're going to see that it's hard to raise money and investors. That's not really specific to creative professionals because in a lot of cases, we're going to have owners and not investors. Now, let's say you conduct business with a partner. Now, you're automatically classified as a general partnership. And this is very similar to a sole proprietorship. All the advantages and disadvantages to a sole proprietorship apply here as well. There's no liability protection. Tax treatment is the same in that it's a pass-through entity. So now that we've covered the default classifications for your business, I thought it'd be a good idea just to walk through some common myths in creating a legal entity. Now I'm gonna say LLC here, but really any legal entity for that matter. People think that when they create an LLC, you can automatically go to the bank and you're going to be able to take out loans and credit. That's not how it works. Now, this is a long-term goal for sure, but initially a bank's going to require that you personally guarantee a business loan for a new business because the risk is just too high. Otherwise, people would constantly create legal entities, take out loans, and potentially default on them. So really in the beginning, your personal finances are going to matter the most. The next one is your personal assets are free from all liability. This is unfortunately not true in all situations. Your personal assets are free from some liability, but not everything. For example, you can't just create an LLC and then go out and do something that's either negligent or illegal. In those cases, the liability is going to fall on you personally and not on the business. Another thing, like we mentioned before, if you were to go and take out a loan in your business's name, but you personally guaranteed it as well, then in that case, you're going to be personally liable for that debt as well. Now, we'll talk about this one a little more later, but if you were to use your business for personal affairs, then that eliminates the separation between you and your business. Also, I thought this would be a good time to cover when we're talking about personal assets, what exactly are we talking about? We're talking about assets that you outright own, cash, investments, jewelry. We're looking at the big ticket items here because at the end of the day, creditors are not going to come after the small things that you own. It's going to be the larger items. Now, a house and a car also fall under this category if they're outright owned. So in a lot of cases, people are going to have a mortgage on their house, they're going to have a loan on their car. And in those situations, the bank has a first lien position and you do not outright own those items. And that's something to really consider when you're thinking about reasons to start a legal entity and you're protecting your personal assets. Because if your primary motivation in starting a legal entity is to protect your house, but yet it's got a large outstanding mortgage on it, then this is not a good reason to start a legal entity. Now, there are, of course, other great reasons, but you need to make sure you're doing it with the right motivation. The next myth is that people think by forming a legal entity, they're going to be able to save money in taxes, and this is simply not true. As we mentioned before, by default, an LLC is completely disregarded for tax purposes, and the income passes through to the individual members. Now, there are some legal entities that have tax advantages over others, like for example, an LLC by default is more favorable from a tax perspective than a corporation is. Now, if you started doing your research on this, then you've undoubtedly come across people will create LLCs and then structure them as an S corporation. More to come on that in the tax section. Now, we're going to take some time to talk through other legal structures because I think that's important for you to understand why I'm saying an LLC is right the majority of the time. Now, again, this is not going to be an exhaustive list because I think covering all forms of legal entities is outside of the scope of this video. The first one is probably what everyone thinks of when they want to form a business, and that's a corporation. A few of the setbacks with starting a corporation are that it's very complex and very costly. This is something that requires a lot of paperwork. You will need to hire a lawyer as well as a CPA. And then on top of that, it requires a lot of ongoing paperwork as well. Another big setback is that corporations come with a large tax burden. Like we mentioned before, the default classification for your business, if you do nothing, for tax purposes is completely disregarded and everything just automatically passes through to your income tax return. Now for a corporation, they're going to file an entirely separate tax return. You'll pay taxes once at the corporate level, and then as that money is distributed to the shareholders, that's taxed again on the individual's income tax return. One of the big benefits of a corporation is that you are able to easily raise money from investors, but for most of us in the creative space, that just doesn't match our business model, and we're going to mostly have owners instead of shareholders and investors. The next one is a counterpart to the general partnership that we discussed before, where all partners are going to have unlimited liability. A limited liability partnership protects some of the partners, but not all of them. But you're still going to have general partners in the business that bear personal liability for the conduct of the business. So that's a huge disadvantage there, is that all partners are not protected in the same fashion. A few more setbacks as well to a partnership is that they're not recognized in every state. The next one that we're going to very briefly cover is a not-for-profit. A lot of people, when they hear not-for-profit, it's kind of confusing because you think that the business does not generate a profit. They in fact do generate a profit. It's just not for investors or shareholders or owners. The profit that a not-for-profit generates is going to be for a purpose. Now, in terms of setting one up, it's very similar to a corporation. It's very complicated. They're also heavily scrutinized by the IRS and any taxing authority because they have a very favorable tax status. They offer similar protections of a corporation, but they're not double taxed. As you've probably already picked up, a lot of these other legal entities, when compared to an LLC, are either complicated to form and maintain or come with a higher tax burden as well. So now let's dig into the LLC. So LLC stands for Limited Liability Company. LLCs are formed at the state level, and you can either have a single member LLC or a multi-member LLC. In contrast to a lot of the other legal entities that we talked about, they're very easy to form and often come at a very low cost. For example, in South Carolina, you pay $110 to start one and then $25 per year after that. So one of the things you're going to want to keep in mind is that since this is formed at the state level, the fees are going to differ from state to state. Now, one of the huge benefits of an LLC is that it offers limited liability for all members. And then for tax purposes, by default, they're pass-through entities just like a sole proprietorship or a general partnership. So the income that's generated by the business is not going to be taxed once at that level. Instead, it's going to flow through to the income tax return of the members of the LLC. Now let's jump into liability protection for a little bit, because as we discussed before, LLCs do not offer unlimited liability. I mean, it's in the name, limited liability company. When you create an LLC, it creates something called a corporate veil over your business, effectively separating you from your business activity. Forming an LLC is just the first step, because then from there, you need to make sure that you're keeping your personal affairs separate from your business. Otherwise, lawyers are able to do something called pierce the corporate veil, and they're able to show that you're using your business for personal affairs, and they're able to extend the liability of your business to your personal assets. And the way you do this is that you're going to separate everything through the use of separate bank accounts. When you sign documents and act on behalf of your business, you're acting as a representative. And then if you're a multi-member LLC, you will need to create an operating agreement and follow that. As we briefly discussed before, one of the liabilities an LLC will protect your personal assets from is liabilities from the actions of employees that you have, as well as partners. And then over time, you'll be able to prove that your business is able to sustain on its own. And then at that point, you're going to be able to take out debt in your business's name. And then in that case, your personal assets are going to be shielded from that liability of your business not being able to pay its debts. It's important to understand that these are the main ways that an LLC is going to protect you, and not create an LLC under the misconception that it's going to protect you from everything. I think that's how a lot of people jump to the assumption that they need a legal entity just to protect them from all liability that their business is doing. But in most cases, that's not true. Now we're going to talk about everybody's favorite topic, and that's taxes. This is where it gets a little confusing, because when you form an LLC, it's a hybrid business. Now it does have default classifications, but you can essentially elect different ways for it to be taxed. So let's first cover the default classifications. If you're a single member LLC, then you're automatically classified as a sole proprietorship for tax purposes, and all the income from your business is going to pass through automatically to your individual income tax return. And then if you have two or more members, it's automatically going to be classified as a partnership. In this case, your company will prepare a separate tax return And then from there, all the earnings are going to be distributed to the individual members. Now, to switch the default classification, you will complete some paperwork with the IRS. You can elect to either be treated as a C corporation or as an S corporation as well. Now, just to reiterate something that we talked about before, creating a legal entity does not create any favorable tax advantages over not creating one. Now, if you were to elect to treat your LLC as a C corporation for tax purposes, I'm pretty confident in saying that no one watching this video is going to do this because you are going to be double taxed once at the company level and then once at the individual level. Now, the trickier subject is the S corporation. Now, electing for your LLC to be treated as an S corporation is where people start to get a little creative with their taxes, but that can get you into trouble if not done correctly. But let's dig through that a little bit just so you fully understand. When you elect to be treated as an S corporation, your company is now recognized by the IRS as a separate company, and you are now an employee of that company. From there, you're now paying yourself either a salary or wages. Now, all the earnings from the default classifications of an LLC are subject to self-employment tax, whereas with an S corporation, the salary or wage that you pay yourself is subject to self-employment tax, but then from there, you are able to make distributions from your company to yourself that are treated differently for tax purposes and are not subject to self-employment taxes. So just to kind of summarize that again, people are paying themselves from their company a salary or wage, and then they're also making a distribution. And the benefit of this is that the distribution is not subject to that self-employment tax. It's still subject to income tax, but not self-employment tax. I know this sounds great, but I would hold up right there. But the IRS says that you must pay yourself a reasonable salary. It gets kind of complicated to calculate because as business owners, we are doing things like marketing, we may be doing some accounting work. We're also, if you're a videographer or photographer, you're shooting and editing, you're selling business. So you're wearing a lot of hats as the owner of your business. This is a hot button for the IRS. So if they were ever to come in and audit your business, that's one of the first things they're going to look at. This is where I highly recommend involving a CPA or a tax advisor to make an assessment and tell you their opinion. And one other thing to consider about this as well is that by forming an S corporation and treating it that way for tax purposes, it does create additional burden. One being that you now have to do quarterly payroll tax returns. You have to do a separate tax return for your business. So some of the money that you're going to save by not paying self-employment tax on those distributions is going to be offset by the increase in cost and time that you spend preparing the tax returns for that corporation, as well as those quarterly requirements as well. Treating your business this way is also going to heavily increase your complexity for a tax return. And in most cases, you're going to have somebody prepare your taxes. Depending on your situation, you may be able to do it for the other types of structures of an LLC, but in this case, you're more than likely going to have to involve someone. Also, if you're going this route, I highly recommend that you talk to a CPA or a tax preparer because they're going to be able to help you calculate that reasonable salary. And then from there, you can do an analysis if it makes sense to structure your company as an S corporation. One of the things I want to reiterate here as well is that since the LLCs are formed at the state level, the various taxes that you're going to be subject to are going to be different. So it's important when you're doing your research, make sure that you fully understand all the taxes that you're going to be liable for. But it's important to take this into consideration because if you're doing an analysis and you have a limited number of personal assets that you're going to be able to protect through forming an LLC, you have to take into account the costs of the additional taxes and preparation work from just not having a legal entity at all. So it's important to consider that in your analysis. So after watching all this, you're probably still asking, should I form an LLC or not? So we covered a lot of information. So I thought what would be best here is to walk through a couple of examples and how I would look at this information in determining whether or not we're going to form an LLC. So let's say you're a photographer that does this on the side. You really don't plan to grow this business to anything more than a side hustle. You're shooting sessions, maybe you're in the family space, and you don't really ever have a need to hire second shooters. And on top of that, you don't have a partner just because it's just yourself doing these gigs. On top of that, let's say you've got a mortgage on your house and a loan on your car, and overall, your net worth is not amounting to a lot at this point in your career. In this situation, it probably doesn't make sense to form an LLC. You don't have any partners or employees to worry about or second shooters. And then on top of that, you don't have any major personal assets to protect. Now let's take another example. Let's say you're a photographer or videographer that started out as a hobby and then it quickly grew into something much larger. So now you've decided to make the leap and you're doing this full time. You have a lot of plans for your company and you're going to grow this to something much larger. You've got a house that you inherited and you outright own that. And you've decided it's time to bring in a partner because you're just not able to accommodate all the gigs that are coming in. You're shooting weddings and things like that that require you to hire out second shooters. In this case, it probably makes sense to form an LLC. You've got a partner, and then in some cases, you're hiring second shooters. And then on top of that, you've got personal assets to protect, like the house you inherited. Now let's briefly cover how you would start an LLC. Your biggest resource is going to be going to the Secretary of State's website for your corresponding state. I found, at least in South Carolina, this was pretty straightforward. The resources were there, including frequently asked questions sections. And then on top of that, everything was done online, and it walked me through the process and asked me all the appropriate questions. I completed the forms, and then within 24 hours, I had an LLC for our latest venture. Now, in the paperwork, it's going to ask you about registered agents, and that's going to be yourself as well as any partners that you go into business with. Once you've taken care of that, you're going to request an EIN from the IRS, and that's basically your social security number for your business. That's what's going to allow you to open up checking accounts and savings accounts, as well as that's information that you're going to need if you have employees. Now, as I mentioned before, a couple of the resources that you can use are your Secretary of State's website. That's going to be your number one in terms of forming. And then the IRS actually has a lot of useful information out there. If you go to irs.gov and you type in whatever question you're looking for, in a lot of cases, they have guides that are going to walk you through it. You don't have to go in and read the laws and regulations. The guides that are out there are typically very helpful. So the next thing that I want to cover, I had a couple of questions on Facebook that I thought I'd address now. The first one is Amanda asks, I'm new to the videography world and I'm not bringing in any major income at the moment. If I want to buy equipment, but my business income will not cover the purchases, what's the best way to do that? This is a great question, and it's actually pretty simple. What you're going to do when your income from your business is not sufficient to cover the investments that you're wanting to make, you can make owner contributions into your business. So you're going to take out your checkbook, you'll write a check to your business, and then you're going to cash that check in your business's bank account. So this effectively separates that scenario into two separate transactions. You make an owner contribution of whatever amount you've established, and then from there, the next transaction is purchasing whatever it is, whether it's a camera or a light or something like that. The next question was asked by Tina. What's the best way to pay yourself and show your proof of income? This is an excellent question as well, and I want to cover a couple things with it. The amount and frequency that you're going to distribute money to yourself is going to be completely up to you. But if you think back to how, by default, LLCs are treated for tax purposes, they're pass-through entities. So again, what that means is that the net income that your business earns is going to be taxed in the year it was earned, regardless of when it was distributed to yourself. And when I'm saying distribute, I'm literally talking about just pulling that money from your business. That may be for you, you're writing a check from your business to yourself. But the biggest piece here is you're going to maintain documentation. And then from there, in a lot of cases, if you're talking about for purposes of applying for a loan, one of the first things the bank is going to ask for is your tax return. And all this information is going to be reflected there. Now, some banks are going to be different and they're going to ask for your financial statements for your business, but in any case, it's always going to be the tax return. So that's all for this time. If you found this video useful, I'd really appreciate a like and subscribe. And if you have any questions at all, feel free to drop those in the comments.